Today, I am in Sausalito, California, and I am near the top of the mountain here, close to this park called Cloud View Park. And it's kind of chilly up here, to be honest. Lots of fog up here, very windy. That's what's really making it feel colder, but the sun's starting to come out. And I'm sure by walking, I'll get all warmed up. Now, one thing I've been trying to do here on the channel is kind of call out all of the desperate attempts I've been seeing from the real estate industry and the mortgage industry to try and get people to jump in and buy a house right now. Because basically, they're running out of ammo, guys, but they're doing a good job coming up with creative financing solutions and different terms that kind of FOMO people into the market, even right now when interest rates and prices are still way too high. Because these people, you got to understand, they work off of commission, and as the sales volume continues to dwindle, so does their income. So that's the real problem with this, and that's why they're coming up with all these solutions. And the one we're going to talk about today is something that I've never actually covered before on the channel. It's called a balloon mortgage. You may or may not have heard this term, and it's not really a new thing, but it's trying to make a comeback due to the fact that people want to make these commissions and make these sales, okay? And this is another way to get a home buyer into a house right now when sales are really down. See, I decided to come up here because I actually been to this park once before, and I remember it's really cool because it's right up here on the top of the mountain and has a beautiful view the other direction, which I'll show you guys here. So here's how a balloon mortgage works, okay? It's a type of loan when you make a low or no monthly payments on the loan, okay? For usually 5 to 7 years. And after this low or no payment period ends, you pay a lump sum at the end of the loan term. And because balloon mortgages don't require a lot of money up front, this can be yet another temptation for today's buyers to go ahead and jump into getting one of these, because it's an easy entry into the housing market where most people are feeling locked out. So the advantage of doing this balloon mortgage is it gives you very low monthly payments for those 5 to 7 years. But when the time comes to actually pay off the loan, you also wouldn't have built a lot of equity because you had these low monthly payments. They'll usually give you a couple of different options for these. They'll give you interest-only payment options, or they'll give you no payments, guys. So you can imagine buying a house and having no monthly payment for 5 to 7 years, and you can quickly see why this is the next thing that a lot of mortgage brokers are probably going to be pushing to people that otherwise couldn't afford to buy a home. Now, the danger with these balloon mortgages is that the terms are much shorter, just like the adjustable rate mortgages, okay? And for the same reason the adjustable rate mortgages are dangerous, also kind of applies here to the balloon mortgages. Because since they're only 5 to 7 years, that means at the end of those 5-7 years, you have to pay off the loan, guys. It's not a 30-year mortgage, so it puts you in the same position as a lot of these commercial real estate owners are in right now, where they have to basically refinance their loans every so often in order to continue to hold that property, because they can't get a 30-year mortgage. I see plenty of listings like this in Miami where they have the for sale sign in the yard, but it's not actually for sale anymore. They pulled it off the market back at the beginning of January this year, never lowered the price, and they started listing it for sale back in July of 2022. Same price, $4.95 million. Clearly, they're not really serious about selling it, but here's something to look at. Home value here went down 7.5% over the past year, so you can see these high interest rates really starting to take its toll on the Bay Area markets here, and this person has a $40,000 a year property tax bill to go along with it. What are the pros and cons of doing something like this? Well, with the balloon mortgage, some of the pros are you're going to have low or no monthly payments, which is obviously pretty tempting in this real estate environment. And you can defer payments for years. And here's the big one, right? Here's the key phrase. You can buy a home sooner because it makes your monthly payments more affordable. It also allows you to focus on other goals, right? Because now that you're saving this extra money per month, you can use the extra money for investments, whatever other financial goals you might have. Hopefully you have the financial discipline to actually do that. And there's no repayment penalty. So even if you want to pay this off early, that's fine too. But there are some downsides, of course. And here are some of those downsides. The risk to your home. Because you need to make a lump sum payment when the loan comes due, you'll either need to save enough cash, refinance, or sell the home. None of these options are guaranteed, and if you can't make the payment, you could lose the home and severely damage your credit. That's the part that I'm worried about with people doing these type of loans, guys, because if you're not financially responsible and you take a loan like this, you're setting yourself up for disaster, and you're just going to end up in a foreclosure, guys. That's the problem. Everything that's being said today, all these different tactics to try and get people to buy homes, is all based on one thing. It's all based on the housing market continuing to go up. If it doesn't continue to go up, you probably won't be able to refinance. If it doesn't continue to go up, you're probably not going to be able to sell it, at least for more than what you paid for it. And if you don't have that lump sum of cash just sitting there after 5 to 7 years, you're also not going to be able to pay it off either. So none of those options are going to be available to people when the time actually comes. And the most likely option that's probably going to happen is people are going to go into foreclosure from this. And that's the real issue, and why I'm sounding the alarm, because when you see these type of things being out there promoted again as something that people should be looking at, that's how you know there's a lot of desperation in the air right now. And here's some of the other cons. We're not even done with the downsides of this yet, okay? It could put you deeper into debt, because when the balloon payment comes, you may need to take on more debt to actually pay off that payment if you can't sell it, or you don't want to sell it, or you just don't have the cash. Another big con, especially right now, higher interest rates. Lenders take on more risk with a balloon loan, so the rates are typically higher compared to traditional types of loans. Makes sense, right? But here's the problem, guys. Even for a 30-year fix right now, you're looking at 7.5%. I don't even want to think about what some of these balloon mortgages are going to be charging people. Probably at least a point higher, maybe 2 points, guys. You could be looking at close to 9.5% mortgage interest rate for a loan like this. And I'm glad that they mentioned this as a con here, because this kind of goes to show you what I've been saying about refinancing is true, guys. Because here's what it says. It's difficult to refinance one of these loans. If you're not making payments or interest-only payments, which are the only two options with these type of loans, you might not have enough equity in your home to do a refinance when the balloon mortgage term is up, okay? Most lenders want to see 20% equity in the home to refinance. And I know that's not a hard and fast rule. It's not a 100% requirement. You need to have 20% equity, but a lot of lenders are going to require that. And if you don't have it, they're probably going to charge you a higher interest rate. And real quick to everybody, I just want to give a huge thank you and a huge shout out to all of my viewers, all of my subscribers, especially all of my channel members that made this channel finally hit the 100,000 subscriber mark. It's a huge accomplishment. It's something that I've been working towards on YouTube here for a little over 4 years now, and I'm super proud that I finally made it, guys. It literally puts my channel into the top 1% of all YouTube channels on the platform, and it's all thanks to you and because of you. So I'm forever grateful to you. Without you guys, I don't have a channel. So thanks for watching. I'm going to continue to keep it real here like we always do. So, is there any circumstance where somebody should actually get a loan like this? Well, maybe, but I would say it's probably not for the vast majority of people out there. So if you get offered something like this, I would look at it as a huge red flag, guys. Unless you know for a fact you're going to have the money to pay off something like this when the time comes, you should probably walk away from a deal like that. Because if you're going to rely on what the lender or the real estate agent is telling you, that don't worry, you can just refinance at the end of the term, or you can just sell it and pay it off that way, that's a huge bet and a huge risk you're taking in this environment to say for sure that you're going to be able to do that. So I wouldn't be taking that bet right now, especially with the uncertainty of where this housing market could be going. And if this is the only way for you to finance and get this property, I would say it's a no-go. But some people might be tempted by it because of the fact that you're making no payments or very low payments. I would even say doing FHA would be better than this, guys. So really the only person that this might actually work for, that it might be a good idea, is somebody who either A, has enough money saved up, or you know for sure you'll have enough money saved up by the time the loan is finished that you'll be able to pay this off no problem, or somebody that for sure is not going to stay in the house for very long and you know for a fact you're going to sell that house inside of that 5 to 7 years, no question about it. And even if you have to take a loss at closing, then it's the risk you're willing to take, and you can afford to take that loss. Because if you can't afford either one of those two scenarios, you shouldn't be taking one of these balloon mortgage loans. But I had to bring it up because it's another thing that's being touted out there as the next best thing since sliced bread. And just don't be tempted by it, guys. You need to have a fat wallet to take advantage of one of these balloon mortgages and not get burned. You know, for such a small little town here in Sausalito, you got a million cars driving by this mountain road here. There's no sidewalk, so not the greatest walking experience that I was hoping for here. Now here's the next thing. New home sales are thriving right now because so many buyers are turning to them because they're just offering straight up better deals. I've covered this before on the channel. You know, builders are giving you free upgrades on the house. They're giving you price cuts, giving you mortgage rate buy downs, giving you all sorts of incentives to go with a brand new home over an existing home. And on top of that, there's inventory. So even better, right? In fact, new home sales are up 4.4%, and they sold about 714,000 units just last month, guys, in July. In June, it was about 684,000 units they sold, and overall, sales of brand new homes are up 31.5% on a year-over-year basis as of July, which is tremendous. However, here's the interesting thing. Even though so many people are buying these brand new homes right now, the prices on them are still falling. Median home prices for a brand new house are down 8.7% year-over-year right now, down to $436,000 as of July. And the reason why I find this interesting is because even though demand is so high, in fact it's up 32% year over year for a brand new house, prices are still falling, which kind of goes against the laws of supplies and demand, right? Because when you have a high demand for something, usually that's enough to keep prices high. And I'm trying to walk down these really steep stairs, guys, while I'm shooting this video, so that's why I'm taking it easy here. And check this out. As of the end of July, there were 437,000 new homes on the market, okay? And at the pace that they've been selling them, it would take about 7.3 months to clear the supply of houses on the market. So that's still a pretty big supply. In fact, this just goes to show you that this is all we need is supply on the existing home market in order to see prices starting to really tank like this. Because when you have more supply than buyers, that's when prices start to come down. And typically anything over a 6-month supply in the real estate business is considered a buyer's market. So that's why buyers still have the upper hand when it comes to buying these new construction properties, and not so much with existing homes. And by the way, earlier when I said they sold 714,000 units in July, that's an annualized number. So that's like the number that they would sell for the entire year, okay? Not just the month of July. Quick correction there. But the problem is this hasn't been enough to really shake the housing market yet, because even though the new home sales are thriving, it's still only about 20% of the housing market. The vast majority of listings that come out and transactions that take place, about 80% of all sales are on the existing home market, not in the new construction market. But this is all a huge green flag for home builders right now that are very happy and are going to be building a lot of houses, guys. So this is good news for buyers out there who have been on the sidelines that want a house, because prices for brand new homes are coming down. In fact, like I said, they're down 8.7% year over year right now. So if you're somebody that's looking to buy a brand new house, it's getting better and better for you, especially as they keep building more of them. Now, another interesting story I saw today: will home prices go down in a recession? We already know that during the 2008 financial crisis, the answer was a resounding yes. Prices did go down, and substantially. But not all recessions were like that, and I've kind of covered this in the past as well and showed you guys. You can look at this for yourself, going back to the Fred charts that go back to the mid-1950s of where median home prices went with all the recessions during that time. And what you'll see if you look at that chart is the 2008 financial crisis was the worst recession in terms of home prices going down. But a lot of the other recessions saw modest price reductions, or sometimes prices even went up or remained flat. What I would take away from this when you look at this historical data is a recession doesn't really guarantee you anything when it comes to the housing market, okay? Because each time we've seen different results from things that have happened. Whew, that wind is picking up. Good thing the sun came out. But here's what we got to look at in practical terms right now, okay? When the cost of financing a home goes up, like what we're seeing with these higher interest rates, it's going to probably have the impact that home prices will go down. However, that hasn't happened in the way we would think yet, in the sense that if you look at the most recent July numbers from Redfin, home prices are still up 1.8% year over year. If you look at National Association of Realtors, they're still up 1.6% year over year, and that's as of July's data. But if you look at Redfin's chart, you can see that home prices are now starting to go back on the downward slide. And here's the thing, we're not even in an official recession yet. And I say official because, we already had the 2 quarters of negative GDP growth last year, and they didn't want to call it a recession then. And the government and our leaders are looking for different definitions of what a recession actually is these days. But if you're going to be looking at buying in a recession, here's some of the advantages. You're going to have less competition because a recession puts more people on the sidelines naturally because they can't afford to buy, which is exactly what we're seeing right now. So if you're someone who can still afford to buy, a lot of your competition has been eliminated, but you also have to take the risk of buying a home near the record prices and hoping that interest rates are going to come back down eventually and you'll be able to refinance. But that's a big long shot right now. And that's why I keep warning people against taking that position, because it's a very dangerous bet to make right now. Also, recessions can lead to lower home prices because of the less competition. So sellers aren't getting multiple offers in many cases anymore, and that can cause a lot of people to reduce the price. And once we actually hit an official recession, likely what we'll finally see is the Federal Reserve pivot on their interest rate hikes and start lowering interest rates. And when that happens, that will also give you an advantage to come in and buy and have a lower monthly payment. And you might say, well, Michael, isn't everybody else going to be doing the same thing when that happens? Well, not if we're really in a recession, because a lot of people won't be able to still. You're going to have people that are unemployed, people that have no savings to take advantage of this, people that just don't qualify to buy homes in that environment. So that still goes back to the other point of having lower competition. But obviously there's some downsides in buying in a recession, okay? Obviously, you're going to face stricter lending requirements, which we're already seeing happen right now, and the recession's not even official yet. You're going to see fewer options available. You're going to see less lenders even willing to give you a loan, and you might see less available inventory because a lot of people that aren't going to be forced to sell are likely not going to want to sell in a down economy. But remember, a down economy can force a lot of people to sell who actually don't want to. So we might see that as well. But I would say the biggest risk of all buying during a recession is your financial security, guys, because when a recession actually hits, unemployment goes up, and you could be one of the unlucky ones that gets hit with unemployment and might not be in a good financial position when that happens, and oops, I just bought a house. What are you going to do now? So you're taking on massive financial risk when you buy a home during a recession, even if you're able to get more favorable terms and get the home for a lower price and all of this, but you're just taking on more risk. And that's kind of what I'm just trying to warn people about right now in general, because if you're buying anything in today's housing market, I think you're taking on an exceptional amount of risk that people a few years ago that bought didn't have to take. So just like the balloon mortgages we talked about at the beginning of this video, take the same precaution with buying a home today as you would with selecting which type of mortgage you get, because every single financial decision you make right now can have a huge impact on your financial future, 5-10 years from now, because of all the uncertainty that's happening with the economy and this housing market. If you enjoyed this video, make sure you subscribe to the channel, and if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.